with me, Waragi-san, our Japan semi-analyst, and also Tom from Liu Yang's team on China Internet Software team, and also myself and Daniel from the semiconductor side. So today we are going to provide key updates on the global and China AI Capex trend and what it means to the semiconductor chip demand, and then to the equipment semi Capex. So from this sequence, we probably will go first with Tom on the latest thoughts on observation on the China AI computing demand, and what's the latest update on the China AI data center, given very popular trends on DeepSeek. So Tom, please go ahead. Thank you.
Thanks, Charlie. So we just want to reiterate our bullish view on the China data center names, mainly GDS and VNet. We believe we're in a clear upcycle for the data center market, and we want to continue to highlight three key theses to the investors. So first of all, we think in the near term, everyone's eyeing on the near-term demand for the cloud Capex. So since the launch of DeepSeek R1, we're seeing global hyperscalers to raise their Capex guidance even further. And markets are looking for an increasing inference usage and focus more on any downstream AI application usage. So those are going to benefit all the data center players, since more server demand will directly translate into more data center capacity need. We recently published a CDI noting that the upcoming Alibaba result on Thursday night is a key catalyst to watch. And I think all investors are eyeing for a higher Capex guidance from Alibaba. So we think that if there are more bullish guidance for AI revenue and Capex in 2025, this could directly become a stock driver for GDS, given Baba is a largest customer for GDS in China. Secondly, we want to highlight that our risk thesis is materializing in China. So GDS and VNet already proved that they can issue private REITs at a 11 to 13 times contracted EBITDA, which is equivalent to a 2026 multiple, as it takes around 1 to 2 years to fulfill the contract. REITs are usually no growth assets, so we believe that growing and quality data center assets should at least trade above that valuation. In the second half, we're more likely to see a public risk issuance that is going to be priced at around 15 times EBITDA on our estimates, which will translate into more room for rating for the data center names. And the last thing we want to highlight is that we're still in an upcycle for the data center industry, given there is ongoing upward revision in the demand, and supply has been relatively more disciplined compared to the past years. And if we study the past cycle, it suggests that during an upcycle for data centers, there's ample room for rating, and we're still at an early stage, which makes us more bullish on GDS and VNet, given we're still trading a big discount vs APAC and global peers who trade at around 25 to 30 times EV to EBITDA multiple. And I'll stop here and give it back to Charlie. Thanks.
Thanks, Tom. So maybe a kind of transition to my coverage. May I ask you one quick question? Do you hear or see any comments that whether China data center customers can still buy H20 chip from NVIDIA, or they intend to switch focus to local suppliers? Can you address that question first?
I think there has been some talk, just given the supply side securities. Although H20 is still probably the top choice for the cloud hyperscalers, but they're shifting a bit of their money to localization, just in case if there's anything happen to the foreign restrictions.
Okay, thank you. Awesome. So yeah, so let me shift gear to semiconductor design and the foundry. So this morning we actually published a report on AI Tracker. So one of the key highlights is that we see NVIDIA's Hopper GPU demand is coming back. We think it's related to the China's AI Capex. So according to supply chain checks, there lots of demand coming from so-called H20, the China version NVIDIA GPU. So I know there have been some talks about potential restriction, but the reality is that now it's still totally fine for NVIDIA to ship the H20 to China customers. I think that the grace period is a 1 year, and now it seems like demand driven instead of last year. People suspect it was just to prepare for the inventory. And then switch gear to so-called global AI Capex trend. I think Daniel and I can provide some updates together. But if you look at these slides, right, it's our framework. For example, if we want cloud AI semi the yellow circle to get to $230 billion revenue this year, we have to have AI Capex to be around $300 billion and global cloud Capex to be $400 billion because for global Capex that includes some infrastructure spending, and for AI Capex that includes both semiconductor and also system integration value. This is how we make sense of all those different data points. But if you look at the recent global cloud Capex update from our U.S. team, now top 10 cloud Capex already get revised to $350 billion in 2025. It's up 32% YoY. So the left-hand side chart is kind of the forecast like 3 months ago. So definitely there's around 20% of revision over the past 3 months. Besides the recent cloud CSP's guidance, Stargate is also one very important component to the higher global cloud Capex. And in our AI Tracker report, we suggested that Stargate is working with Dell and SoftBank to get some GB200 NVL72 server racks. And on the other hand, for the sort of people concerned about the NVL72 assembly yield issue, I think Daniel has talked about that before. Even Microsoft cut some forecast. Again, it's a purely yield issue, supply issue. Demand side remains to be very strong. So the next question is that how we're going to deal with those additional B200 chips, right? Output from TSMC's fab. So here is the way out, the solution. So for example, big ODMs like Supermicro, they are producing lots of 8 GPU HGX. So it is not like NVL72 highly integrated. So essentially put the 8 GPU in one server and put the 8 servers in the rack, right? So it is not as efficient as the NVL72, but still a very, very powerful machine. So with those demand upside from Hopper and also Blackwell shipment getting smoother, we think the risk to NVIDIA or TSMC should be very, very low into NVIDIA's prints. So which means that Joe Moore's revenue forecast for NVIDIA in January and the April quarter should be solid, achievable. So I want to make sure we have some other topic and time in the Q&A session. Happy to talk about TSMC and ASIC, but I want to hand it over to Daniel for his observation on cloud data center supply chain recently. Thank you.
B 站财安君
Thanks, Charlie. Morning, everyone. So from my side, maybe I can share 3 points. First, starting from the discrepancy between the Capex commentary and all these supply chain supply issues. A lot of investors are wondering why at the same time we are revising up our Capex forecast in US, but revising down our GB200 forecast in Asia. I want to step back to our big note, which we published in August last year. The conclusion is that I think from U.S. investors or our colleagues in U.S., they are starting from very low base. Initially, I think Eric Woodring only forecast the cloud capex to grow 8% in 2025, which is very low. Versus Asia, typically we are looking at 30% or even 40%. So first, I want to reconcile why we are revising down in Asia because of the supply issue, but US are revising up because we are starting from a very different basis. Asia, typically, we follow the supply chain. We could see sometimes the number to be very high, but normalizing to a more reasonable level. US investors or our colleagues, they tend to be conservative initially and revise up their numbers. So we addressed this back in our August report in 2024. And the conclusion right now is that it's converging. You see Jomo's number going up, cloud capex number going up. So essentially, it's converging between the US forecast versus the Asia data points. And second, regarding Charlie's commentary on the GB200 supply issue, it's a very big issue. It's not all of a sudden because starting from October last year, we talk about there could be a risk that GB200 cannot match the timing. And right now it's materializing and every single CSP wants to convert into GB300 because GB200 is an immature solution. It's just too rushed. So other than converting to GB300, I do believe the tier 2 CSP and enterprise customers are looking at HGX as an alternative solutions as well. So this echoes to Charlie's commentary that we are seeing higher HGX demand and also, again, explaining why cloud capex is strong, but GB200 is revised down because the money are going into some other products. Third, regarding the GB300 roadmap, again, NVIDIA is pushing the supply chain to have a 2-month shift. Usually, every single testing or sampling requires 3 to 4 months, but NVIDIA is pushing the supply chain to shorten and squeeze it to 2 months. So starting from February, the downstream ODM will have 2 months shift. Every 2 months, they need to migrate to another phase of the sampling, from engineering sampling to design sampling to mass production sampling every 2 months. Again, very, very rush, and it's a squeeze from the NVIDIA. And I do believe the downstream, a lot of companies have to work very, very hard in order to meet the time frame. And the key changes right now, from what we can see, other than the multiple changes in the computing tray, the socket changes, and some material changes, recently we do pick up some data point that there are some change on the power supply, which is the supercapacitor, because NVIDIA just tries to simplify the architecture. So this could be a dynamic into the next few months. Again, everything will be changed on a weekly basis because NVIDIA is pushing the supply chain. Timing-wise, still target to mass produce in second half this year. If everything is smooth, GB300 can be on the market by 3Q. But if there's any further change, then it could be by 4Q or first half next year. It's on a system level. So these are the key updates from my side on cloud, and I will hand over back to Charlie.
Yeah, thanks, Daniel. Reminding us that there's still some so-called supply chain side risk. So the bottom line here is that top-down demand, no matter from China Stargates, global capex demand is still strong. Just that the very last mile, right? The server rack assembly, we need to be mindful. There will be continue some issues. So in between those modules, semiconductor chips production, I think should be smooth, right? Especially GB300 module called Cordelia. I think that one will adopt the so-called socket design. So the module yield or output should be okay, which means that NVIDIA can still book the revenue. But we are still mindful about the downstream, inventory issue. And let's switch gear to upstream semi-equipment side. First of all, congratulations to Wadaki-san to continue its Japan IA #1. Thanks for spending time with us. So, Wadaki-san, can you give us some latest updates on semi-cap space? And one investor already asked specifically about your view on Laser Tech and Tokyo Electron. Thank you.
Thank you. Yes, I'm Tetsuya Wadaki. I cover Japanese semiconductor equipment name. And currently there are many big changes are coming, and some of these changes are not included in consensus. First, this is a market assumption of SEHA. This market assumption forecast are made by Japanese SP maker, including Tokyo Electron, Screen, Ebara, Kokusai, Advantest, Disco, and so on. So this is the Japanese SP maker's market consensus. And comparing previous forecast, Tesla revised up, and WFE revised down. And actually, Tesla and back-end equipment demand is strong. First change is the HBM, and all of my information come from SP maker that have a close relationship with memory maker, not from memory maker. So all of Japanese SP makers said that Micron's planned manufacturing capacity of HBM in this year end will become almost the same as Samsung. So many equipment maker and material maker received great inquiries and orders from Micron now. And Hynix, Japanese SP maker said that Hynix succeeded to develop HBM4 and they will start their Capex. And Japanese SP maker said their HBM equipment business with SK Hynix in 2025 will be much bigger than 2024. And Samsung, they did not start the meaningful volume of Capex of HBM. So each SP maker said their HBM equipment business with Samsung are lower than expectation. But these are already offset by another business. Japanese SP maker received that many orders from Samsung's LPDDR businesses. So we should pick up DRAM related stock in Japanese SP guides. But this great order only went to back end, not the front end. Front end equipment company are now planning to cut production volume from this March. And this cut to volume is not so small, meaningful volumes. And not every equipment, but Tokyo Electron, Applied Materials, Kokusai are now planning to cut their manufacturing volume of etcher, furnace, CVD, sputtering, or ion implanter. And cleaning system, CMP, quota developer, not plan to cut manufacturing volume. So I'd like to answer first question on that my view of Laser Tech and Tokyo Electron. And we should pick up Disco and Tokyo Semis and Micronix Japan. Actually, orders are now increasing and not included in consensus. And we are now waiting the bottom out of WFE market, but production volume will decline from this March, so we will not bottom out soon. So I'm now recommend on back-end maker more than from WFE company. And Laser Tech, company honestly said that President said we cannot see any good news following 12 months. So now it's not timing to pick up Laser Tech. Their main customer is Intel, Samsung, TSMC, and Intel and Samsung will cannot buy so many EUV tools and inspection machine, and TSMC hesitate to use high-NA and EUV. So LaserTech's business environment is worst in my coverage. And then I'll comment about each company's impression of earnings release by within 1 minute. First, Disco. We should pick up Disco. This is because company is still conservative about HBM business outlook, but their information is too old. They will soon change bullish on HBM businesses. And Advantest, stock price already jumped up, but two more good news will come. Advantest now penetrated Sony and Apple's baseband businesses, so share gain. And TSMC and NVIDIA will start the HBM test by themselves, so their HBM customer will increase more. And Tokyo Electron, they got POR for their cryo etcher from maybe Samsung, but Kioxia will use competitors, not Tokyo Electrons. So it is not good news for Tokyo Electron. So my conclusion, we should pick up HBM-related backend equipment like Disco, Micronex Japan, Tokyo Seimitsu, and LaserTech, Tokyo Electron. Difficult to pick up now. That's all. Thank you.
请在 B 站财安君频道观看更多精彩内容。
Thanks, Wataki-san, for your source updates. So maybe we can move to the Q&A session. We have several questions already. So first question is to Tom. The question is that whether the current China data center capacity can be sufficient for the inference and demand, because it seems like still some underutilized data center, or do you think China need to build or China vendors need to build much more new data centers?
Thanks, Charlie. So I think it depends on the region. We think that in 2024, a lot of the data center or server has been deployed in rural areas like Inner Mongolia, Hebei and Shanxi's rural cities. Those to serve a lot of training demand, especially from ByteDance. So those areas could be in shortage if similar level of demand continued. But in more core tier 1 cities, we think that in the near term, probably not. Of course, there's still a lot of checking points when you see what's Baba's commands, Tencent's commands on their future Capex, and maybe want to learn more about where those servers will be deployed, if they're going to be used for inference demand. And also it depends on their customization as well. So the previous built or the underutilized data centers does not necessarily serve the new demand, and they might have new designs in the future. So there's a lot of things we want to check and see first. Thanks.
Gotcha. So, for example, if I can have a chiming one question, where is DeepSeek servers located? And I sort of heard that the servers still crashed time to time. Does that suggest that DeepSeek or other China service provider need to buy a lot of new servers?
Yeah, previously we heard that VNet had a order from DeepSeek in Inner Mongolia, its campus in Ulanchabu. But it's not a huge one. It's like a 20-30 megawatts order. That was like second, third quarter last year. But we haven't heard on any following on orders, especially after its R1 launch and a surge in demand usage. Okay, understood. Okay, thank you. So Tom, please keep us posted if you see any rush order, because I think those H20 demand recovery could be indicator some new capacity is coming. Then probably with shift to other questions. So first question is about our perspective on
FII regarding Stargate. So again, Dell is covered by Eric Wuring, FII is covered by Sharon. My point is that for those Stargates Capex to realize to a real semiconductor order, there need to be kind of ODM in between, right? So that's why we want to share these data points. Our understanding is that SoftBank works more closely with Dell, whereas Oracle they also want to have a partner in Asia. So that's why FII plays a role and it works closely with Oracle. On the Dell side, we have a better visibility about the order, but I think it should be below 1,000 units of racks. It's not a very, very big number, but at least we start to see Stargate placing orders to Asia supply chain. And second question is about our view on MediaTek's ASIC projects and also GB10. So I think MediaTek already kind of admit that their Google TPU projects mass production should be first half next year. We think that is still very, very big contribution, maybe $2 billion to 2026 revenue, even with some delay. The question is about whether MediaTek can secure a next generation TPU V8 project. I think there should be 2 nanometer, but our understanding this is still under a very stiff competition between Broadcom and MediaTek for the TPU V8. Probably we won't get a final result until second quarter or mid-year. GB10, we think it's a very niche market because the design is not good for cluster. So some people speculate China customer will buy GB10 to replace the data center server. I don't think that is the case. And secondly, GB10 is a kind of Linux base, right? So it's also not for the regular consumer. It's really for lab, for school, for researchers. So I think we think 500K units should be around the right size. But for another project that MediaTek and NVIDIA is working on, which is Windows on ARM, we have like 2 to 3 million units for this year, and get to like 13 million units in 2026. And this question also, Tom, I believe, based on your channel checks, do we know if data centers in China have to be upgraded to use liquid cooling system for processing inference? Tom, do you have any thoughts on this?
Actually, not much from our side, because on the data center level, we're not hearing too much, because a lot of the usage right now is in the northern region, which already have a very low temperature and low electricity cost.
Right, that's right.
So they're kind of saving, those equipment cost investment through this way.
Yeah, that's right.
So when they move to inner cities, I think it also depends on what type of chips and servers they're deploying.
Yeah. So I think this question probably to Sharon's team maybe better go-to person. Next question is also for you, Tom. What's the station on China CSV's Capex number for the past year, this year, and next year?
I think for 2024, BAT, based on our internet team's model, Capex should be growing 130% year on year on a calendar 2024 basis. And into 2025, our current expectation is still flat, so sustain a high level, but not expecting any growth. But if we account for potential higher Capex from ByteDance, we're looking for like around 30-40% growth in 2025. But also we mentioned earlier that Baba's result on Thursday is very important. There has been some market expectations on Baba raising their Capex higher, so that's a key event we want to keep an eye on.
I see. Thank you. Yeah. So I jump to the next question. I guess I can try to answer. Just to confirm, is China reordering H20? If so, how big is the expected size of the H20 order? Yeah, good points. Yeah, we think so. So there was a temporary slowdown of H20 production in Taiwan supply chain last year, but we heard it's coming back. So for the Hopper total volume in 1Q is 750K units out from KYEC, but we heard most of those should be H20. So I would call it like 500K units of H20 in 1Q. We sort of hear some end customers like Alibaba, ByteDance. So there are indeed some very, very big China customers, let alone companies like Inspur, are buying those for several products. So regarding second quarter, so far we haven't heard any concrete number. But my thesis is that if China AI demands are strong, China Capex continue to be growing, and H20 is still a kind of a legal product to ship to China, why not NVIDIA continue to produce the H20 product in 2Q, right? So for the full year, I would say 1 million units of H20 should be reasonable. It's kind of a flat year on year, right? But the risk today is definitely kind of new updates from the US and China on this AI compute capacity restriction. Last one, maybe we close up with this question. What's our view on TSMC regarding the potential deal with Intel? So we happened to put out notes yesterday on this topic, and I know it's a very complicated, but what we're trying to do is to provide some facts and also what the TSMC management said over the past 6 months, right? So first of all, if you look at the one key facts, I don't think TSMC or Taiwan really kind of conduct any unfair competition. It has been TSMC's R&D efforts and maybe those engineers' efforts to get to very high market share or so-called technology leadership. So from this perspective, I think TSMC's decision for the US fab should be based on one, customers' need, and also shareholders' value, right? I don't think TSMC really steal the business, right? It's through the fair competition. And secondly, just to recap some question we asked management over the past 2 quarters earnings call, because since the last June, right? If you remember back then, Mr. Trump was still the president candidate, but he already shared some concern about Taiwan taking over lots of the semiconductor business. So in that context of background, I asked whether TSMC would accept a JV in the US. The answer was no, right? Because I think for TSMC, if they do JV in Japan and Europe, there are additional business upside. But for the TSMC, the US operation is essentially based on the existing business. Just they offer so-called global flexibility in manufacturing to customers, right? So the benefit of a JV in the U.S. is pretty limited. And then on that's October third quarter 2024 earnings call, we further asked a question about the consideration about Intel fab buyouts, and the answer was that TSMC was not interested. I think the reason behind should be that first of all, TSMC already has some outsourcing from Intel already, and secondly, TSMC they have other CPU customers like AMD and ARM-based CPU. But lastly, is definitely TSMC and Intel's process are different. So historically, it will cost a lot of money, right, to align those different fabs process, let alone lots of human resource issue in the U.S. to be dealt with, right? So I know it's a kind of 5 months ago, but you can still see TSMC strategic thinking on this. And just a reminder, Joe Moore also published reports this morning on Intel's future direction. But the point he wants to make is that Intel fab, in terms of cash flow, still burning cash, right? So I think for TSMC to do this JV, I think they need to be super careful. But what TSMC can really do is to further expand the U.S. fab capacity. They have been doing so, even for the coming A16 nodes, right? And CoWoS and R&D in the U.S. can be discussed, right? Because the cost can be managed, right? But buying out a peers fab, I think they want, in terms of financial risk, should be much higher. Yeah, hope that can still help a little bit. We like TSMC valuation is attractive, and we don't rule out that the tariff and USA will continue to be the overhang. But once that get clear out, probably kind of a good opportunity to buy on dips.
B 站才安君
Yeah, and last question just came out. Sorry, I don't know how to comment on this properly. You can refer to our report last June. So the question was about China's chip like Huawei's Ascent 910B or 910B C compared to H20. So yeah, we do write a report, I think last June or July after our China trip. The finding was that NVIDIA's H20 chip, right? If you connect hundreds or thousands of H20 together to a cluster, actually its performance can be like close to half of the H100 cluster. So there was a feedback, and in that report we did said that if a Chinese customer can buy H20, they were reluctant to use the local chips. I'm not sure if it's more cost issue or performance issue, but H20 on a single chip level, it looks at performance is only 10% of H100, but if you put them together, it can be like 50% of performance. Yeah, hope that still be helpful to you. Okay, yeah, thanks for joining this webcast with me, Otaki-san, Tom, Daniel, and we will see you next week. Thank you.